Good weekend, all. Ira Epstein with your Spider ETF stock market wrap-up. And this wrap-up is your weekend edition for Friday, the 23rd of September, 2022. What an afternoon I've had. Did all my wrap-ups, my weekend edition for my paid subscribers. They got it because everybody's going to watch everything. So today the markets came unglued. Now, you might ask why today and why not yesterday when all the central banks made their move, as you know, starting on Wednesday right through yesterday. And we come in today, and what's different today? Today, I think, my personal guess was set off of currency move when Parliament in the UK passed Prime Minister Truss's tax bill. Now, the tax bill gives tremendous breaks to those that do very well financially on income tax, making over the equivalent of $155,000 a year. But there are other breaks, in all fairness. Buy a home, they're waiving the taxes on that. There's many other parts to it that go on. I wrote about it in detail in my full research report today. And there's a windfall tax on domestic energies to help try to, if you will, pay for what she's doing. The problem is the raising of interest rates, runaway inflation, and now cutting of taxes is typically a mix you hear from Turkey. It's not something you hear in the UK, and the pound went into a tailspin. It fell 4 cents. So instead of a pound being like it was last night, $1.12, now it's $1.08. It sent the euro down a penny and a half. So if you're in Europe now, you're at 97.5 cents. The talk is that the Bank of England might have to go into an emergency session if this spiral continues in the currency. We'll know about that come Monday. Traders, like we have Fed fund futures, they're betting 100 basis point hike. The bank was trying to avoid that. Now that's what people are pricing in. And this is just day one of it. So who the heck knows where that all goes? As for us, you saw what the Fed chair said. You know the hawkishness this week, and it put the market down. I was one of the lone wolves out there that thought that we would come down again and test the June lows. I never buckled. I pointed out here and in my other tapes that as the market was rallying, the 200 week and day averages should be enough to contain the rallies, and they were. And you went back down, and certainly in the cash S&P and Dow, you have now taken those out. What if I tell you I think that the market now has done enough to get a bounce? We're in a zone. That doesn't mean that it's going to be Monday morning. We're in the zone right now to get it. Unfortunately, I think if the bounce comes September, very beginning of October, I think it's a rally that should be sold, and then I'll be looking for the market to come down again. And in November, if I'm right, I'll start looking for something that might carry a bit towards the year. I'm not bullish, don't get me wrong. I don't know where the low is, but the cycles will sort of fit in that way as to what's going on. In Home Depot, I keep hearing them talk on TV how well it's holding up. That's all I heard today. What are they talking about? I don't know what these guys smoke. Does that look to you on a weekly chart like it's held up? You're down 1.8% for the week. I guess, relatively speaking, it didn't fall out of bed 6, 7, 8% this week, but it is well off these highs in the 330 area, back to 270. It has certainly lost 10% of its value recently. I'm not going to the highs, I'm talking there. You got lower highs, lower lows. You have a market now, I can argue, that is in a zone, the 200-week average. That's a 4-year average. That's an important support zone combined with the lower Bollinger Band. So if you were to ask me, is the market at a zone that I think it can start holding at? Yes, that's what I think. But don't tell me how pretty the chart has been. The chart has been ugly, and momentum is still pointing down. When you look at the bank indexes, same thing. The 200-week has proven to be an argument number. It held the market before. Until it proves that it can't hold the market, even though I've got a pattern here that has got higher lows, lower highs, it's a difficult pattern. I could make an argument, hey, I don't think that it's smart to be on the short side of this market. I see no reason to be long, but no reason to be short. I want to cover shorts in the industrial sector, XLI. And you'll say, why? Momentum down, but again, I'm at that number that held before with the Bollinger Band. So until it proves to me that it can't hold that, I want to bet that it will. Does that mean I'm looking to be long? No, not at all. I'm looking for it to be short again on good rallies in that market possibly. XLE, energy sector, I'm still very much in the bear camp. Now, I know that there's Mark Fisher. I saw him today, how he was talking on CNBC and what he was doing. But he's also looking at natural gas for 2024. You heard the year I just said. I went and checked the prices. It's $1.70 or so lower than what January of 2023 is trading. And I get it. He's saying to him, that's a value play. Unfortunately, there's no volume and open interest. If you buy it, be well-heeled like he is to withstand whatever pressures because you'll be one of the few people out there. Okay. The other thing he's talking, if crude can drop down hard, he'd like to own crude. Well, this is still saying the energy sector's in trouble. So I think the pros will sell this market at 77.60 with stops over 82.97, and I think they're still looking for the 64.70 zone. Uranium, trendless. The market's got a lower and low, higher high. It had a run, probably watching lithium, which took off in a big way because of car batteries, but this isn't quite ready to go. It's stuck between the lower and the upper Bollinger Band with a narrowing band. That's about all that I could say on it. In the gold market, let me explain it to you how this works. You're in India. You want to buy gold. Big people that collect a lot of gold, tradition in the society. You buy it in rupee, but in order to get it, gold's priced worldwide in dollars. So as the dollar goes up like it did today against all major currencies, the whole basket, that rupee buys you less. So the gold market, even though it's coming down, is still more on a relative basis there, and that hurts the overall demand. Now, when it drops like it's doing right now, 1.82% this week, the amount of the currency play offsets or adds to that. No, it offsets some of the drop. You're buying it cheaper in the rupee value, but because the dollar's stronger, they don't wipe each other out. It's a little bit of a break, but that hurts the demand overall. You don't get the break of the gold is breaking and, oh, it's getting cheaper. You don't get that because you're losing on the currency value. Dennis Gartman used to always play gold, that he'd be long it or short it in a currency. And he was trying to take the dollar out of the equation and get the double hit for it. It was a good thing to do. It's confusing for the average guy. Number one, they have no idea how to do it. All right, it is complicated. Gold miners, still bearish. Embedded reading, no, I can see it at 2106. Add to that, all the cost of operating that mine just went up. Companies borrow money all the time. It's rare that they go into their piggy bank and go, no, we'll fund our operations. No, it's a game where you're borrowing, you're digging out the gold, you're getting a cash flow and so on. Well, that money just got a heck of a lot more expensive, so be careful with that. ARK, I know she has her followers, and this may be a base that eventually proves worth something. I don't know. But the chart is bearish. It came down, and this is the area to cover shorts. You have a momentum down, but at the Bollinger Band, you got to 3709. You're knocking on the door of that. China's got its problems. She's still very heavy into technology, a lot of it because of companies based in China and so on. Whatever she's doing, the market doesn't like her. It hasn't given her any reprieve whatsoever. This will be her year of a monster loss. Maybe she can come back next year. You got to wipe it off this year. In Apple, I still think Apple's going down. And I've been saying I could make an argument for the 130 level. Lower highs, lower lows. It's one of the few that are maintaining too high of a PE. I know you're going to tell me about their products and their company and how great everything is. This is a market that punishes high PEs. It's that simple. And any companies, and they're one of them, that have that high PE, I want to bet against at this point in time. In Tesla actually had a good overall week. It was down 9%. And they're telling me it did well this week. I swear to you, I'm watching TV and they're going, how well Tesla did. I don't know. If I bought something during the week and it's down 10%, I don't think I did well. I don't understand what people are doing. I see what Tesla is doing. It is caught in sideways action. Is this a top? I'm nervous about that. And you'll say, why would Ira say a top? One reason, all the competition is coming out. The Cadillac Lyric's going to be out very shortly in 2023. Then the Ford products, Lincoln products, they're all coming at it. They can't not have some degree of success against the sales of Tesla. That's going to be my point. I am not a Tesla bear yet, but I am wondering. And I'll be alone, I'm sure, on that because of the loyal fans. But folks, when there's more supply, what takes care of a high price? Additional supply. There's more cars coming, electric cars. And unlike just you have a choice of a Tesla, you're going to have a lot of choices. I don't know if the cars will be good or bad. You don't know if they're good or bad, but I have to assume they're going to be okay and that people will buy them. And each time they buy one of them, they're not buying one of the Tesla models because that's the primary seller of these cars. Twitter, this is my throwaway money. I told you, I think Musk is going to lose this case. And I'm still looking for this market way up here before it's all said and done. I'm probably wrong. But, it's called throwaway money. Let's assume he wins and he doesn't buy it. So maybe it goes back to 30 or something. It's a good company at the end of the day. So I like to put it up here. And luckily, it's in an uptrend, which is hard to believe because I was buying it in this zone, and I told you that. I'm looking for the resistance at 43. We'll see if it can clear 44.5. And if it does, then it's on its way to doing something. We'll see if that happens. TLT, just riding the lower Bollinger Band. This is that Gorilla Glue trade. What do I mean by that? If you go into Home Depot or whatever yours is, Menards, Lowe's, whatever you have in an area, when you latch onto this Bollinger Band and you don't get off of it, it's like glue. And what it does is it drags the momentum down. Now, the momentum ideally embeds at the same time. You haven't done that. So I'm very careful here. I have a feeling that you're going to get to a point here where a bounce is coming. The 30-year bond is already up today with everything collapsing. No, it lost yield. The far back, and this is a 20-year plus, it's not the same as the near terms. Know what you're buying when you play with that. Sorry, that's the end of what I had there. And, I try to explain this as best as I can in my morning updates. Now, each morning I start off at 5:30 in the morning on all futures. At 9, I move to the ETF spiders in the stock market. And I'm rotating stocks all the time. And it's there. Buy here, sell there. I'm tracking what I do so I can keep up with you the next day. Remember, I manage no one's money, not looking to manage anybody's money, not looking to establish a track record in any manner. This is for my paid subscribers. It's what I think they should do. I'll take some of the trades. I won't take some of the trades. What I do with my money is my business. But I'm putting out everything I think that should be done. And you take it from there and you decide, does this fit your style of trade? Now, let me tell you how we do this. I start off telling you what happened in Asia and Europe overnight, if the fundamentals there mean anything, what reports are coming out and the like. Next, we're going to cover all the futures at 5:30 going into these videos about, 18 minutes long. On the bottom, there's a scroll bar. Let's assume you just wanted to go right to energies. Just grab the scroll bar, big letters. It'll tell you what section you're in. Let it go. You're right where you want to be. But I got to cover this because I have traders that want to get everything, all right? And they're watching this. Well, I do the same darn thing in this market. You see these, but I'm also covering the stocks. So actually, I'm going to put in a section here called stocks so that you don't think I'm missing that. And I cover them. There's over 40 charts covered. I will, Monday through Friday, typically I'm looking at the daily charts, but I'll mix in a weekly every now and then. And on Friday or Saturday, when I put out the weekend edition, it's all weekly charts, and I may go back to a daily chart to make a point. It's inexpensive. You try it for, I think it's under $17 for 48 videos for 30 days. Come on. 3 Starbucks. 3 Starbucks without a tip. Give it a try. What do you have to lose by it, all right? The 16, and you can quit just like that. I get people that look at it and they go to me, you're helping my trading. You're giving me ideas. Or some people, they don't like what I'm doing. They'll quit their subscription. I can't be everything to everybody. I get it. IraEpstein.com, under the word research. You can also just follow my finger up here. There'll be an icon. Give it a click. It'll take you right into that section. Let us hear from you. I'm Ira Epstein. You have a great weekend. I'll see you all on Monday.